Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending January 31st, 2025. And this week I am titling the video, Did DeepSeek Disrupt AI and Markets? I'm host of InvestTalk, Justin Klein, and this is a good overview of what happened in markets this week. A lot of green, but also some notable pockets of red. And we started off the week with the news about DeepSeek, the Chinese hedge fund that actually developed a model that's more efficient and in many ways more effective than the uh, current version of ChatGPT and a lot of the models that are built out here in America. And that caused a big drop in a lot of the names that were hyped up due to AI. And you see that with NVIDIA this week down 19%, Microsoft down 6.75%, Oracle down nearly 10%. You had ServiceNow down 11%, Tesla down a little bit. So, certainly some deep movements into the red for a lot of the big tech names. Now, Apple, Google, Meta, those all did very well. At Meta, Apple did report earnings, and overall the market was okay with it. So we'll dig into the charts here in a minute, but I'll look at the economic numbers like I usually do. Richmond Fed manufacturing, that did climb, still negative territory, but you see you're trying to get back up into positive territory. Continuing claims for unemployment, that did tick down. So the jobs market looks to be getting a bit better. And then pending home sales, that was the one that really struggled the most in December on mortgage rates near 7%. So the housing market does continue to struggle. You had inflation data that ticked down just a bit for the month of December. Obviously, that helps the Fed a little bit, but they don't really have a lot of impetus to either tighten more or sorry, loosen policy more by dropping rates or ending QT, mainly because they want to stimulate with what's happening with the jobs market and manufacturing and just overall sentiment in the economy, starting to get a bit better. And same with, and then on the inflation front, it's kind of sideways, right? Not really accelerating to the upside or the downside. So they probably want to see which way that breaks, especially with the tariffs that are likely to, be implemented. And President Trump has talked about approved over the weekend the tariffs, and how wide-ranging will they be? We shall see, and what type of economic impact will there be, and retaliations, et cetera. So something that certainly I think could spark a downdraft in markets in February, on top of the AI news. When you get this double whammy of potential problems in the market, this is something that potential problems in the economy. This is something that could take down the market. Okay, for the month. Now, does that mean we peaked? No, I don't think that's the case, because I think there's still, liquidity out there, that is still relatively robust. You see this with the commercial bank credit. Look at this reacceleration. This is the 1-year chart, right? I'll go to a 6-month chart. And what you can see is going into the election, things were trending higher. Everything was pretty good. And then pretty much the start of the year, it's accelerated to the upside. And now we're at nearly 4% credit growth year over year. And what you can see, I'd have to go to a different chart, but basically when this goes negative, that's when you really have to worry, but it's really accelerating to the upside. And so you really don't have to worry too much about that. And so I think you shouldn't really be worried about what's happening in the credit side of the market. That remains relatively robust. And as long as it stays in an uptrend, that means more liquidity is being pushed out there by the banks, and they're the main drivers of liquidity in the market. So if they're lending, things tend to go well for the economy. Same with Treasury. If the deficit is going up or down, that impacts the economy. And what you see here is the deficit continues to, unfortunately, over the long term, plunge to almost new cycle lows. But that is positive near term, right? And so overall, I think liquidity dynamics remain pretty robust, especially over the next quarter or two. Now, here's the Fed number. We had the Fed week on Wednesday, or Fed announcement on Wednesday. They didn't do anything. And the odds of a continued pause in the month of March went up a little bit from about 72% to now 83%. So, once again, there's not a lot of impetus for the market to, or for the Fed to really ease aggressively. So that's kind of where we're at. Let me dig into the charts now because this is something I am going to continue to watch. Here's the NASDAQ. And actually, I want to bring this up. Let me actually go back here. Let me go back here. I'm going to, I'll just pull up Morningstar. This is always good. Take a look at the broader market, the S&P. Okay, let's look at the portfolio. And what I want to show you is how much weighting the technology industry has on the indices. Tech is a third of the broader market. And then you have financial services, that's 13%. Then you have healthcare, 10, and you have consumer cyclical. Okay. Now, let's take a look at XLK. Okay, this is technology. What is this showing you? Look at the MACD, it's now below zero. Go over to a weekly chart. Look at the MACD. This is not good. This is momentum waning in a big way. And you shoot over to the SMH, it looks pretty similar, right? This is the semiconductor index. And you had that move down. And then let's look at some of the bigger names of the index, NVIDIA. So we had that move down, and we had a bounce, but that bounce did not get any follow through. In fact, we came back the next day, had a roughly flat day on Thursday, and then a sell-off into the close of the week on Friday on big volume. And if you zoom out to a weekly chart, right, look at this volume. When you have something in a large uptrend and it has this reversal on volume, look at the MACD divergence. This wants to go lower. Now, it is into support here on the 50-week moving average. So could you get a little bounce? Potentially. But what also could happen is you get a bounce, you get more chop, and that is just bearish consolidation to move lower. Okay. And then you move over to some of the other names. Microsoft also struggling on Thursday and Friday. Similar type of pattern overall. You look at like a Broadcom, right? Reversal, definitely a bit stronger, but overall, this still is threatening to break this 50-day. And if it does, if we start breaking below the lows from this week, watch out. There's a lot of positioning here that could be unwound in a big way. Here's the cues. But let me go back to technology. And you can see here is if you get below this, right, you're probably headed all the way down to the lows of the summer. I think that's very, very possible as we head into next week. So be on the lookout for that. That's what I'll be watching to see what kind of follow through we get from what I think is a landmark news event in AI. Narrative is everything in markets. And so if it changes the narrative of, AI development and deployments of data centers and, buying of these powerful chips, does that hurt the NVIDIAs of the world and the Microsofts of the world, those that are investing heavily in AI? Does that change in a big way? And the reality in my mind is probably yes. And I'll be following the markets to see what kind of follow through we get to kind of confirm that this is that watershed moment that shifts the narrative. And if that narrative is shift, and then you add on the tariffs on top of that and that uncertainty, that could certainly bring the markets down in the month of February. You're already getting this MACD divergence. This is on the S&P. Overall, we try to bounce after that drop on Monday. Once again, didn't get much traction and actually had pretty good sell-off on volume into the close on Friday. Okay, small caps, those kind of chopped sideways throughout the week. Let's look at growth to value though. Let's take a look at that. So here's the growth to value trade. Once again, sold off, didn't really get much of a bounce, and sold off into the end of the week. So I am starting to feel like this is a tired market. The only real strong stocks are Amazon and Netflix of the major tech names. The Move Index, this is something I'll be watching as well. Does this get some traction to the upside on the back of, a Fed that's still doing QT, that is not looking to cut rates in the short term? I think that is something I'll be on watch for. Let's pivot over to gold. Gold prices continue to be strong. You see this closing near an all-time high, down a little bit on Friday, but still very, very robust in that market. And I think that will be of importance as we head into next week. You also have the bond market. Bond market rallied a bit here over the past couple of weeks after that big drop in October, November, December, and I think this is a something to watch for. If you get a broader sell-off, I think you could see some more strength in the bond market in the near term on worries that this there could be a shift in AI development. There could be a shift in how the economy operates and a lot of uncertainty around supply chains and tariffs and all of that. There's just a lot of catalysts here lining up that could roil markets in the short term. Here's the dollar getting strength. That usually tightens policy as well. Tightens liquidity, excuse me. And I'll be watching for that to get a breakout. What else do I want to get to? I think that's about it. I'm turning modestly bearish on markets. I think that's the summation here, is that this is not something that is likely to create a 20-30% downdraft in markets, but could you see something similar to last summer, right, with the yen carry trade unwind, where you have a good solid 3-4 weeks pullback into support? And that would be here. Let me go to the SPX. Clean this up. I have a lot of stuff, huh? Let's clean this up. All of these support levels, these are things that I put in and it gets saved and then becomes less relevant over time as new highs are made, etc. So let me do a fresh fib. Okay, that'll be good. So here, this would be the 200-day moving average, 5,600 on the S&P. This area where you had this a lot of chop last summer, that would be natural support in markets on a few weeks sell-off, and that's kind of my base case, honestly, right now, because I do think that this DeepSeek news is a watershed moment in AI and a shift in narrative that could create a broader negative environment, especially for tech, but probably would not accelerate until the liquidity dynamics in markets become more dire, which likely won't happen until the back half of the year. But that's where we're at now. Appreciate you all tuning in. I hope you have a wonderful weekend. A reminder that the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell security or to participate in investment strategy. The views are my own and do not represent those of KP Financial or those associated. Have a wonderful weekend.